So in today's video, we're going to look at Nvidia and see if this is a hyper bubble or if the market valuation is justified. And just quickly, we have a look at that. We can see that the stock is up almost 2000% over the last 5 years, especially in the last, let's say, 6 to 18 months. So how do we do that? So the interesting part is to have a comparison to other companies. You can see that Nvidia's market capitalization right now sits at 2.2 trillion US dollar, which is by far the biggest one on the semiconductor space. And actually, to be honest, this is together with Apple and Microsoft, the top 3 company on the planet right now. So Nvidia is just, one of the biggest companies on the planet in terms of market capitalization. But again, that doesn't necessarily mean that the stock is overvalued or the company is gonna tank from here. So let's have a look at the fundamentals and the numbers. So traditionally, the gaming segment for Nvidia of these 5 segments has been their main driver, and this is what most people recognize the company for historically. And you can see that the gaming has kind of stagnated over the past 2 years, and I do expect this kind of revenue to not go above 3.5 or at best 4 billion in the coming years, at least not in the coming 18 months, because there's huge competition from AMD and the consumer is relatively weak right now. So the gaming, I don't expect to be like going a lot much better than we can see now. And then the other 3 smaller ones, they have basically as well stagnated. I mean, it's a bit up and down, but you can see that the numbers are in the same ballpark. Anywhere from 600, 200 to 400 here. And then on the auto, it's again like 200 or at lowest 140. And the same for the OEM. But the big elephant in the room is the jump from just below 4 billion US dollar in revenue a couple of years ago in data center, and all the way step by step, and this big jump from 4 to 10 and then now at 18 billion. And the interesting part actually is that if you look at the outlook for the first quarter of next year, or basically right now, January, February and March of 2024, the guideline for 24 billion plus minus 2%. The interesting part for me is that, in my opinion, where will those additional 2 billion come from? Most likely data center. I don't see the gaming jumping up from 3 billion, just below 3 billion to just below 5 billion from out of nowhere. There's nothing big happening on the gaming side. We know that they just refreshed their lineup, but again, the market hasn't like really went overboard and bought a lot of these new updated super series. And we know that actually from Moore's Law is that the gaming YouTube video leaker that has good information a lot about these big companies, that the volume on the super refresh for the gaming side is not that big. So I don't expect 2 billion to come from there, and neither from these 3 obviously. So where is it coming from? Obviously data center. So we will most likely see 20 billion in the next line here, just some few months from here now. So the revenue, okay, interesting. I mean, 22 billion total revenue for past quarter, and at that run rate, we are basically at around 70 to 80 billion US dollar annually for the entire company. And the market cap is at 2 trillion or thereabouts. So we would have a kind of price to sales ratio of 20 to 25, which is really high. But the interesting part for me is that you see that the price to sales is really high. The PE ratio is high, currently at 74. But in all honesty, like when you talk about a hyper bubble, especially in the tech space, you can see like PE ratios of 100, 200, 300. Tesla had at one point 1600 PE ratio. So I wouldn't say this is a hyper bubble, especially considering that most likely the size of the AI market, which will drive their Nvidia's data center revenue, will increase according to most industry insiders. Most people think that we are just at the beginning of an AI super cycle, with inference and training hardware being needed for Apple, Microsoft, and all the big companies, and also smaller companies. So you could see that Nvidia could increase their earnings at least again by, I don't know, like 20, 30, 40%. So next year, maybe this PE ratio is going down to 50 to 40. So I don't think the forward PE ratio is like justifying the words of like hyper bubble. But there's more to that. As I mentioned, that there's more to the numbers, and you can see that the gross margin has been going up from 66 to 76%. And again, this is on for entire revenue base of the company, so for all those 5 segments. And we know that these 4 other segments are nowhere near those kind of gross margins as data center. So when you dilute it to 76%, and if you are gonna thinking about how much gross margin they actually are selling their AI hardware for in the data center, you are easily talking 80, 85, in some cases 90% gross margin, which for a hardware company of this magnitude and this size is just, I would say this is like sorry for my lack of knowledge, but I would say honestly that this is like historically unique. But again, that doesn't mean that I think this company is worth it and there aren't risks to it, which I will mention coming up in the other part of the video. So we looked at the price to sales, we looked at the PE ratio, we looked at the revenue basis, the insane gross margin, the insane growth, the insane total available market, and the super cycle of AI hardware. So we know all of that is good. And the interesting part with Nvidia's margin and revenue are that they are, just as I mentioned, so insanely high on the current basis that if I look at the numbers now, I wouldn't say they are in a bubble. I would say actually that these numbers as we speak today are justified. I don't think by any means that, I mean, their gross margin puts Apple's to shame basically. And we know that Apple is usually a high premium market company with high premium products. So yeah, a company that has like 80, 90 billion revenue run rate, maybe 100 billion if everything goes well in 2024. And with like probably like close to 80% gross margin. Of course, it's not too overvalued in my opinion, even given that being like the 3rd biggest company on the planet, because there are no one else with these kind of numbers. Why do I have a suspicion still on this company, and why do I, like as an investor, or why haven't I actually went into Nvidia and bought the shares from my own private use? So I think there are a lot of, let's say, dark clouds that are possible on the sky for Nvidia. When we look at the total AI GPU market, we can see that the main challenge is coming from AMD right now. So let's have a look at AMD and their respective like revenue. So you can see that this is AMD's 2023 full year revenue at just below 23 billion. So this is a big company, of course, but not compared to Nvidia, which recently just jumped from basically this kind of 20-25 billion revenue on a yearly basis to just like 60-70. And you can see that that AMD has a much more reasonable divide between all their segments, all the 4 main segments, which is embedded, gaming side, the client side, and the data center. Now, same with Nvidia, the data center is gonna be the driver here for AMD. And in AMD's case, their data center revenue is divided on the GPU side, like the AI, which is quite low right now, or at least for 2023 it was. And mainly this was based on the CPU side. So you know, your general purpose server computers, and yeah. So we can see that the data center was increased by 40% year on year, which is good for AMD on Q4 of basically the last quarter. And but again, these numbers are nowhere near Nvidia. Again, you can see that Nvidia has like 18 billion on data center, and this is pure AI revenue because they don't have any CPUs like AMD has. So this one is even higher margin. But the question arises then, how do I see this market develop going onward? So if you look at this, again, this is just also interesting, just quickly, you can see that they have expected that the GPU market will increase on an average of 31% from 2022 to 2032. So there's a lot of sense in that regard that the growth is gonna be there for AMD and Nvidia to basically gain revenue going onwards in the next 10 years. When I mentioned like kind of dark clouds on sky for Nvidia possibly, and why you should be careful with investing on a company that is on all-time high and is up 2000% on the past 5 years. So we know that Meta, basically previously Facebook and Microsoft, they said that they will buy AMD's new AI chip as an alternative to Nvidia's. And why would they do that? Well, imagine if you have 10 billion and you are Mark Zuckerberg and you want to invest in AI hardware and you're going to take the lead on AI. You can either buy Nvidia with their H100 with like, I don't know, $20,000 per unit, maybe $30,000 per unit, or you can buy AMD's at most likely much lower price. A lot of people think it's half the price, like 15 to 10,000 US dollars. But the interesting one with AMD is that on a technical basis, this AMD chip, the MI300, is actually better than Nvidia's H100 on parts of the AI, like let's say the inference. You have the inference part and then you have the training, which you do in the background. But the inference is when you basically go on a ChatGPT and ask for, like, you know, any questions, whatever that might be, and how quickly can the AI answer you with a good answer. And MI300 is really interesting because I've looked at the details, technical details in my other video, which I will link to, but we know that MI300 has a much higher bandwidth and much higher memory, and actually they will introduce a new version of MI300 with HBM3E, which increases that lead even more, so it will be even more efficient or faster on inference workloads. So if you are Mark Zuckerberg with your 10 billion, why would you be investing all your money on Nvidia, and then maybe you risk in the same time that, let's say, Microsoft with their 10 billion go to Nvidia, go to AMD and buy their majority of the chips for AMD, and in that sense they get basically double the AI performance. And how will that affect Microsoft and Facebook in relation to each other, and who's going to be the market leader on you know, the technical solutions that AI will provide on a day-to-day basis? So that's one of the reasons why I think that you see these headlines where these big companies, they are actually, you know, already start taking a stance that, you know, sure, we buy a lot of Nvidia, but we for sure will buy a lot of AMD as well. And right now Nvidia has something like 95% of their revenue in the market, but I would say that they have maybe 90% of on the actual volume, so number of chips sold. And this is because that AMD, although they have only 5% of the revenue, they sell them at half the price, so they should have roughly 10% of the market in terms of number of units shipped actually. And another reason why I think that all these big companies like Meta and Apple and Microsoft and even Amazon will also buy AMD is not to allow to Nvidia become the dominant player here, and which would basically make Nvidia put them in a position which they will increase their prices even more. And yeah, I mean, that's not just viable. I think the margins that Nvidia have now, you know, with this 76% gross margin, and again for the specifically for their for this segment data center is probably 85. It's just not sustainable. Even if the market increases, let's say in total available market, yeah, as you can see here, according to this graph here, even despite that, you could argue that AMD is the better buy, because most likely I think that they will gain market share in terms of both units and revenue, because the other companies, the big boys big players cannot allow Nvidia to become dominant. You cannot have an AI market hardware where Nvidia has 90% of the market. It's just not sustainable. And at some point they will become so big that they will basically even pressure the players like Taiwan Semiconductor, who manufactures this chip for them, and threaten them, you know, if you don't do this for us at this price, we think that your chip manufacturing cost is high, so we're gonna leave you for Samsung, or we're gonna leave you for Global Foundries, or we're gonna leave you for Intel. Obviously that's not as easy because TSMC is the leader now, but yeah, that's possible. So I think all of these players you see here, ARM, AMD, Intel, TSMC, ASML, everyone wins if they don't allow Nvidia to become, like, you know, owning 90% of the market. And also you add to that Apple, Facebook, Alphabet, Google, Amazon, and also the smaller players. So I think this is something to be considering, because if that day comes when AMD starts to also get, you know, maybe 5-10 billion billion in sales in data center per quarter, and you know, and then Nvidia's revenue stagnates, and also maybe more importantly the gross margin takes a hit, because, you know, Facebook maybe goes to Nvidia, sure, we like your product, but we're not gonna pay, you know, double of what AMD offers, especially with their lead in terms of inference performance on MI300 against H100. That wave is likely to come, and if this gross margin goes back to 60%, or even if you would have had this graph for, let's say, another 4 quarters previous to that, these numbers would be around 50 to 55%. So the question would be, what happens to Nvidia's 2 trillion market cap, 2.2 trillion market cap, if people start to invest in AMD? But again, don't forget, like Intel, sure, they are not in a good place now, but even they are offering quite a good roadmap for AI hardware. And we know that if Nvidia, you know, starts to see some kind of problem on the data center, then these other 4 segments by no means will be able to carry a company of 2.2 trillion US dollar in market cap. So yeah, so what do I summarize after this video? I think like the company as of right now is not overvalued. I have to be honest, I don't think it's overvalued. I think it's expensive, but this is not a bubble. According to the numbers right now, according to the current PE ratio of 74 and, you know, the forward PE ratio of, depending on what you expect of growth, but let's say 40 to 50. So yeah, I don't think the company is overvalued. But I think the risk is if the gross margin starts to take a hit, and if AMD mainly, but also other companies starts to, you know, offer nice solutions on data center, then these other numbers won't justify the company of 2.2 trillion. So yeah, so be careful. This is not investment advice, and it's not meant to look down at Nvidia at all. I think this is a great company. I see Jensen Huang as probably the best CEO of the past 2 decades, because he's always ahead of things. You know, he saw the crypto bubble coming before it came, and they started to produce a lot of GPUs for cryptocurrencies and crypto mining companies. And then he did the same thing with data centers. So the guy is beyond a genius. I think he's even more smart than in reading the market than anyone else. So yeah, it's not to look down at Nvidia, but I think like you should be as an investor. Even let's say if Nvidia continues to grow quite a bit in the coming couple of years, 3 years, I honestly think that in these kind of lists you will find good companies like with less risk, because if you have 90% of the market, 95% of the revenue and the earnings in the AI market, the chances are at some point that you'll lose market share, because where are you gonna grow? So yeah, I believe that's about it for today. And yeah, just be careful. This is not investment advice, and good luck to everyone. See you in the next one.